Hello, guys. Good morning. Welcome back to midweek live analysis with Prince Wonder. Now, as usual on the program, we're going to be taking a look at the financial markets, crypto, forex, trying to decide what or try to see what the market is doing and how exactly we're going to be reacting to that over the week or over the month. Just trying to get a perspective on where the market is and how we can make the most of what the market is doing. Now, if you're a trader, you agree with me that the last couple of weeks have been very indecisive in the markets, especially with the USD basically just overtaking everything. Yeah, so it's making it a little difficult for pairs to move unhinged, right? So I've been taking a look at the DXY and trying to get a perspective on how the market is reacting and what exactly is in place. So I've been taking a look at much larger charts, trying to see on a larger time frame, and I realized we are at a 20-year high for the dollar index. And in as much as we've been seeing overbought right from May, basically we're still reheating the zone. And the likelihood of pulling back, although when that correction actually happens, it's going to be a deep and strong correction. But the likelihood of that correction coming before we hit, say, this price, this area, 110, 119, is really, really unlikely. Yeah, so if you're trading, you really might just want to take more of short-term trades and leave the general trend to the general trend. Yeah, I mentioned on last week's analysis session that regardless of not being able to determine what the market is going to do in the long term, you could break that down into smaller time frames and then trade the smaller moves, shorter time frame moves, right? So regardless of not being able to determine long-term plays, you could still have a fair idea as to how the market is going to react in the short term. All right, so digging into the cryptocurrency market, basically we're in the same situation in crypto. So, dollar, it's dollar. In as much as the cryptocurrency market started with this decentralized angle, we see it starting to copy moves from traditional markets, right? Because at the base of it all, it's still just supply and demand, and basically the same people trading in these markets. But to top it off, we've been in a bear market since, early this year, late last year, give or take. The bear market has been in full swing here. So it's been a steady down slope for crypto, and we're still indecisive as to whether we're going to go lower or we're going to reverse from here and go up. So we're just in the middle trying to decide, right? So now the big question is, are we dropping below $18,000 right now? I believe that's the question on everybody's mind. Are we dropping below 18K right now? Because 18K has basically held price up after we broke below 23, 24, and $27,000. 18, we've not closed below 18, right? So the market has, on the daily at least, we've managed to keep above 18,000, even though we dropped 17 at one point. So we've actually managed to stay above $18,000 this entire time. But right now, it's really starting to look like 18 isn't going to hold this time around. I'm actually keeping my fingers crossed, trying to see what the market is going to do here. We're now at 18.7. My RSI is really giving me an overbought, basically an oversold reading, but I don't trust that this market has bottomed out yet. Okay, I don't trust that this market is bottomed out yet. So now, personally, it's a simple issue with crypto, unlike Forex, okay, especially when you're not futures trading. All I have to do here is simply wait for confirmation on what the market is going to do here before taking a position. And if I want to sell, I simply wait to see a break below 17.5, 17.2, 17.3 to give me confirmation on the sell, and then I just jump in. But until then, I'm bearish, but depending on what I see in the market, I could still change my bias. But regardless, whatever bullish thing I have in my head basically goes out at $17,300. So just mark that. So regardless of whether I drop an update or not, at 17.3, whatever bullish thing in my head vanishes. All right. So 17.3 is a point to watch for should we drop that low. Now, because the possibility of us doing that is actually very high. We ranged within this area and used 19.6, 19.7 as our base. If you check the Telegram group, I sent a chart, I believe this chart, and I told you guys we're going to retest 19.6. Now, I didn't go further than that because firstly, you need to see how the market reacts at the support, and I don't like being too bearish most of the time, but it's just what it is, right? So if you expect to drop to 19.6, really you wait to see how the market reacts there before you take a buy. So we had a bearish, a much deeper sell than I called out, and as such. So now the market has been forming stages of consolidation over and over and over again. Firstly, we consolidated up here between 23 and 24, 25,000, give or take, and we stayed there for about 2 weeks thereabout. We dropped from the new zone, still consolidated August till about ending of August thereabout. We dropped to a new zone and then consolidated again. Let me mark that out for you guys to see. So we've just been dropping from one area of consolidation to another area of consolidation. And in all this, you notice one key thing. Basically, people are really trying for this market not to go down, but it's just not possible. We're in a bear market. Notice, once the market cracks that zone, you see the strong bearish move. Likewise here, the strong bearish move. Likewise here, the strong bearish move. So we're consolidating, we break, we have that massive downtrend. We try to consolidate again to go up, impossible, another crackdown. So that's what we've been doing. And we've done it 3 times so far. This actually brings back memories of the last bear market. I had a similar chart on my screen at that time. I don't think I still have those records, but I had a similar chart at that time. So we consolidate, we break, we consolidate, we break, we consolidate, we break. This is an effort for the market trying not to go down all at once, but the fact is market sentiments are just not with the bulls in this market right now. So it's going to be impossible to really crank it up and push the market price really high, because any small uptrend, people are booking profit. That's the major problem. Any move up, people are booking profit. So it's impossible. It's very difficult to push the market price past a resistance when we have a lot of sellers at a resistance. Okay. All right. So likewise, we've broken below now, and I sincerely doubt we're going to see this kind of consolidation again. But just to keep our fingers crossed, let's skip and see. And note what I said about 17.3 basically being my trend invalidation point for any kind of reversal or uptrend from here. Now, that being said, for BTC, Bitcoin being indecisive really isn't, or doesn't mean that we can't make money off of alternate coins, right? So I'm going to take a look at some of my favorite pairs. Sure, you guys should send in coins you want me to look at. So as soon as I'm done with this, we'll dive into that, right? So taking a look at my dear ICP, if you've been following, you know I analyze this a lot, and I'm sure I gave a buy signal from last week's program around here, and you see the move. Now, so we're back at this support, took a swing, missed. Now we're almost primed for another uptrend. So sometimes a lot of the time when the market is consolidating, all you have to do is know the range and then just scalp it. I've said this thing over and over and over again. The market consolidating is not a bad thing. Trade the range. You don't need to wait for a breakout. That range, buy, sell, buy, sell, buy, sell, buy, sell. All you have to do is just buy and wait and sell. That's all. So long as the market is swinging between these two zones, you're good. All right. So now this is another swing for ICP. Provided this trend remains intact, this is literally what we're looking at. So see a move from here back all the way up there, and 8% profit. In a bear market, 8% is actually a really good ROI. In the bull markets, you tell somebody to take a 10% trade and they look at you like you don't want them to progress. But I'm sure a lot of people are searching for that 10% right now with no luck. So it's just a season, all right? So get with it. Okay, so Solana also at a mild zone, also consolidating. If you look at these charts a lot, you find a lot of consolidations. Just find the range and just swing. Okay, don't try to buy at this base spot and ride 20%. The market psychology really isn't at a position where it can accommodate that level of confidence, positivity. All right. If you check a lot of the fear and greed index, you see that it's tilting towards extreme fear in the market. So with extreme fear, nobody is FOMO buying anything. At least not beyond. This is why the bear market is the best place to learn how to trade, because in the bear market you're going to be logic and reason based. You're not going to be acting on emotions, but you're going to be looking for data to back up what you're feeling. Okay, you're going to be looking for data to back up what you're feeling. And if there's no data, you're not moving an inch. This is why it's difficult for price to move in a bear market. Unlike the bull market where any little everybody has jumped into the market, people that newbies that just came into the market that don't know what they're doing, they've already jumped in and they're pushing price up. But in a bear market, after the series of losses that you've taken, you really don't just jump into the market if you're actually brave enough to continue trading, right? You will not just jump into the market. You wait for and see what exactly price will do. And if the market has already started to move before you, it has gone 2-3%, you feel like this market has already moved too much, right? Because most of the reversals, trade zones, they really don't have more than that 5, 10, 7, 8% move to make. So let's imagine we got into this trade. You see that's still basically another 7%. So, and this is really, really good for the market situations. Usually, if you break it down to smaller time frames to scalp, you're only seeing 3.4% per trade, and you're still not going to put in your entire capital on that trade. So it requires a lot of discipline. So it's going to teach you a lot actually if you take your time to really learn how to trade with the current market conditions. All right. Okay, so switching to the Forex market, I trade both markets, so it's imperative I check both of them on a steady. All right, so on a weekly time frame, I still have, I mentioned before that after we broke below this zone, this is our next key support down here, and until we drop there, we've not really bottomed out. So you could just break it down to smaller trends and trade those trends as we go, which is when I identified this range. And now we've broken below that range, pretty much the same for BTC. And this will now be our resistance, right? This will now be our resistance. So all you have to do now is just pay attention to how the market is starting to react here. And if it reacts as poorly as I expect, you take a sell, right? So it's simply a confirm and trade. I posted something on WhatsApp yesterday, and I was, traders react, we don't act. If you were someone who acted before the market gives you confirmation on the move, before you really want to switch that bias right now, you want to react to what the market does, not act and wait for the market to move. You want to see certain confirmations and decisiveness from the market before you make a move. All right. So wait for the market to act, then you react to whatever action the market makes. Okay. So RSI really isn't my concern on this point. The weekly time frame, which I checked at first, I told you guys I wasn't going to be making any moves, any buy actually, until we bottom out here. And looking at the DXY earlier, that I said we still have some room to grow. If this actually plays out, we really could be seeing that sell back down here. So you see, it's basically just a correlation thing. There's a very good chance of it playing out, and so I'm sticking with it until I see otherwise. Now, the fact that this is actually a mid long term play over the next couple of months, so you can still break this down to bits and pieces and trade it, just like what I said, on a lower time frame. You wait, see how it reacts, and then you take a sell. We sell from here, it's going to be a really good move. I can assure you of that. All right, so next, my second favorite pair to trade right now, GBP. You see, GBP has not GBP USD. USD is basically pulling up the rest of the market. So GBP AUD, it seems a bit more stable and realistic right now. Relates well with technical analysis. Has been flowing really well for me. So I've been taking more interest in it lately, and here's my bias on this one right now. Now we broke below our previous resistance, and now we're consolidating between this zone. My RSI basically is giving me some sort of a buy push up kind of thing, but even if we do see a pull up, I'm not expecting much more than a fake out. I'm not expecting much more than a fake out. So worst case scenario, if this is going to be good, we would see a breakout, retest, then a bullish continuation. If it's good, if it's not good, we're just going to see a fake out, and then we're coming back down. So, but the key thing here is just waiting for a retest. You see, in the bull market, I really wouldn't be waiting for all of these retests and all these things and confirmations and stuff, because the market sentiment is in a different direction. But with the current market conditions, you really want that extra confirmation before you make a move. Even if we're taking calculated risks, you really want these risks to be worth it, to be in your favor. And psychologically, this really isn't in anybody's favor right now. Buying at a resistance is already a very bad move. So that, I've said severally, I don't do. I don't buy at a resistance. Now, the market price is already at a resistance, which basically means I can't do anything. So the only things I can do is wait for a breakout, trade the breakout, wait for a retest, buy the retest, or wait for a fake out, and then I join the confirmed trend, right? So that's just it here. I can't take a position right now, so I can only wait and see and then react to what the market does. Emphasis on react to what the market does. Switching back to what I said earlier, react, don't act. Wait for the market to make a move, and then you react to it. Sometimes you come on your chart and the market has already done all of that, so all you have to do is just react to what you're already seeing. In situations like this, it hasn't actually done that yet, so you just wait and see. All right, so let me. No, I don't do gold. I don't like gold. I don't know why. I had a very bad experience with gold. There's this very good friend of mine. I always call him a gold digger. The guy is hung up on gold, and he trades it really well. And he tried to make me do that as well, but no, no. I tried it and it did not end well. So it's not for everybody. You see a very sweet trade on GBP JPY. Now this is an already made trade. So all we have to do is enter. Deciding where to. Let me not be greedy. Okay. So this is an already made trade. You look carefully, we already have a bearish divergence on the RSI. The market has hit that resistance. So all we have to do is take a trade. So this is a clean, clear sell. So personally, I'll take two positions on this. If I get the second position at least, I'll take a buy from a sell from here, and then also still wait to see if the market comes back up into that zone. Why? Because of the risk to reward ratio. It looks like it could actually drop from here, but also looks like we could actually still retest that zone properly before the real sell. So if with the 1:1.9 right 19 right now, really not all that good. If you wait for the market to come in a little, you see from 1:1.19 we go up to 2.7. But like I said, so as not to miss out on the position entirely, could be entering from where the market is right now and then take a second position after it goes up. All right, guys. So the floor is open. Send in the pairs you want me to look at. Let's do that in a jiffy so that we can get on with our daily tasks today. Okay. All right. So in the absence of any suggestions or pairs, we'll call it a day for today. As usual, 8:30 Wednesdays in the morning. We're looking at the market every Wednesday at 8:30 in the morning. So you can set your time, set your alarms. We're also going to be sending reminders. So the program and then
But
you
I have
see.
a pair. I have a pair. I don't know. Where am I supposed to send it in?
Oh, okay. You're supposed to send it in the group, but sure. Let me know. Tell me.
Just these dots. I was looking at it.
Which
Looking at
one?
what the market is.
Which pair?
Is ETC USDT crypto actually, not for
GBP.
ETC USDT on crypto and then dot USDT. Those two pairs.
Type it in the group.
Okay. Okay.
Okay, ETC, Ethereum Classic. Hmm. All the pairs basically just have all the same patterns. Okay.
Okay.
Looks like a good buy though. Market is already trending, so depends on how greedy you want to be, or you can take profits from the middle here. Uh,
Say
and then
that
also,
again.
I say it
So I
depends
can
on
take
how
what?
greedy. It depends on how greedy you want to be. You could book your profit at 7.3, give or take, or you could try to wait for 7.68. So it depends.
That's on dot.
Yes, on dot. If we got a better entry, it would have been a lot better within the zone. But the market is already moving, so our stop loss is eating a huge portion of our distance. So, well, it's entirely up to you to decide which one you want. But both of them actually seem likely. So you might want to wait for 7.68 at least. Maybe you might be lucky. If it doesn't get there, you see
Uh,
signs of start, and then you just close the position. Okay, Ethereum Classic.
but generally, you think we may have small I don't know. what BTC will likely be doing today.
But with alternate coins, it seems like we're actually going to rally a little bit. For BTC, I don't expect more than a consolidation. At best, the best case scenario is a consolidation. Apart from that, we're dropping.
BTC run this guy whatever BTC does.
Yeah, the thing is, the best time to trade alternate coins is when BTC is consolidating. Because that money that is
Okay.
not actually playing around in BTC goes into alternate coins. That's the best formula. So it's just as soon as BTC switches from that consolidation to try to make a move, prices will start to dump because people start closing their position. Apart from that, okay. So this is Ethereum Classic. I think this is better. This is better. This is better. Small risk, decent risk to reward. So this is Ethereum Classic. I think there was one more suggestion in the group. Okay, see. GTC USDT. I don't think I've ever looked at this pair before. Mm, this is the first advice that the first advice I gave when it became evident that we were in a bear market. Avoid coins at all-time lows. Avoid coin lows because they are bottomless pits. They don't have a bottom. Same way coins, the best coins to trade in a bull market are coins that are at an all-time high. They can just keep going. High risk with very good reward. Okay, so avoid coins at an all-time low because they have no bottom. They can just keep going down and they will keep going down. Anything that makes it drop below this point is no holds barred. Well, in this case, you actually have a mildly decent support, so it's not entirely not worth the risk. So you could still take a position and have a sense of where to place your stop loss, which is mostly the problem with coins at an all-time low. Yeah, so having an idea where to set your stop loss really is the problem with them. So in this case, you could it actually has a very good RR. But well, like I said, we have a decent stop loss, so you could actually still move down a little. Aside that, please don't trade coins at an all-time low. It doesn't. It's not in your best interest. As soon as the market breaks this support at basically $2 1.95, avoid this pair for the longest period until it forms another support like this. As it's not going to end well. I hope that doesn't happen. But now in this case, we actually are bouncing off of this support. We're starting to see a reaction to the market from that support level. Seeing as we're unable to push past this point, I actually do think if we come up now, we would be breaking below that, which is why I pushed my TP all the way up there. Following the past market price action, you notice the consistency of the market hitting that point. So we broke out, didn't retest that, we dropped, still didn't. So if we're actually pushing up this time around for real, we really could be retesting that zone to really just mark out our resistance. Okay, so that's why I'm actually selecting this. I'm going with this resistance. 16 to 26.87%, 1 ratio 1.6, 1.61. It's actually really, really good. So happy trading. Okay, so guys, that's all we have time for today. Thank you for coming out. See you next week. I remain your humble host, Prince Wonder.
Thank you very much, sir.